Howdy friends, thanks for swinging in for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. Well, it's really been haves and have-nots as it relates to moisture this year. Some parts of the region seeing near record amounts of precip, while others are fighting drought conditions and just dying for rain. But there is a lot of optimism as we think of the cattle markets right now. Summer video sales season is well underway, and we're talking the highest prices we've ever seen for spring-born calves for fall delivery. So there's plenty of optimism. Today we're going to talk about those video sales and the results we've seen so far. Of course, we'll look at the weigh-up market that is yet to slow down, talk about the futures and the cash and where they're at the midway point of the year, have an update on the screwworm situation, talk a little about feed costs, and try to get a bead on where we're at in the cattle cycle. First, though, a message from the sponsor of our report, the Wyoming Beef Council. Well, back at the start of June, it looked like the top may have already been set in the cattle futures as they were starting to come down, still near record high levels, but it wasn't long into the month of June before the buyers came back and we saw this market shoot to all-time highs. Feeder cattle on the August contract up to 313, live cattle up to 219. From there, things did quiet down in June to some degree, and then right after the 4th of July, we saw the feeders hit contract highs again. So there's a lot of optimism out there, but certainly uncertainty and quite a bit of volatility. Fundamentally, we're seeing a pretty strong floor on this market right now, but there is the opportunity for profit taking. Now that we're past the 4th of July though and getting into the dog days of summer, we'll likely see a pullback to some degree, but leverage will continue to favor feeders as supplies remain tight and beef demand historically strong. Now, we have seen the cash trade slipping lower for really the past couple of weeks here. Still, the market did gain a little bit of money in June. Larger front-end supplies and packers reducing the kill did weigh on prices to some degree. Before the 4th, though, cash performed better than expected. Still about steady to $1 lower, but most of your live sales $225 to $232, dress sales $368 to $372. Now that's the supply side of the equation. As we flip over to demand, it's been nothing short of impressive. We're talking beef prices that we haven't seen since going back to COVID on the wholesale level. There during the spring of 2020, we did see the choice box beef cutout get up to $475, but for most of June, we were talking the second highest wholesale beef prices in history. They were almost straight up for June. So we've seen impressive demand here. Helps that we're producing impressive quality for beef. We've got the highest prime grade percentage in a long time, really ever, for as consistent as we've been in producing that. That's due in part to the fact that we're feeding these cattle to heavier weights, but it is very optimistic on the demand side. Now, thinking about packing capacity, we will see an increase this year. There are 2 new large plants in Missouri and Nebraska that have come online. As they continue to ramp up, we're just going to see more competition for fed cattle. So that's going to help the feeding segment and really anyone that's got cattle to sell. We could see the feeding segment get squeezed as we move deeper into this cattle cycle, especially when we start really retaining heifers and just decreasing that supply of feeders. But right now, it's optimism almost across the board. Looking at the on-feed supplies with this month's cattle on feed report, bit of surprise in the placements figure. It came down 8% from last year. It wasn't expected to be down that much. Total inventory was up from the previous month, but 1% below year-ago levels. One of the reasons that we saw the placements number lower than expected, well, that's because of the screwworm situation in Mexico. USDA closed that border for most of May and July, and so we didn't import any feeder cattle. That created just less feeders in the supply chain. Now, there was a big market drop when the announcement came that the border would reopen. As of July 7th, one port in Arizona is open with a phased reopening of other ports if the screwworm situation doesn't worsen. But the market seemed to recognize that while we are allowing those cattle in again, we're probably going to import about half the number of feeders from Mexico that we did a year ago. So really, that's just supportive of this market. Certainly a situation, though, that we have to continue to watch. Now, moving over to the feed side of the equation, of course, at the end of June, we get USDA's acreage and grain stocks reports. Looking at corn, those stocks are a little below last year's levels, but at the same time, USDA told us that 4.6 million more acres of corn were planted this year. When you consider pretty good growing conditions for most of the Midwest, that's going to be supportive of this idea that we'll have a bit of a lid on corn prices. It's the third highest corn acreage going back to 1944, so that should help weigh down the cost of gain, which in turn helps feeders who are paying so much to own these calves. And again, that lower cost of gain encouraging them to feed those animals to heavier weights. The hay market, not like the corn though, it is starting to rise. That's largely a function of drought and just how widespread it is. And then the areas that weren't in drought, that were producing a good hay crop, well, they saw a lot of hail. So we're probably going to see reduced hay production this year, and already we're seeing the price start to climb. Right now, USDA is quoting most of the grass and alfalfa hay $130 to $165 a ton, just depending on where you are. As we talk about drought, northern and western Montana, southern Wyoming, Nebraska, a lot of areas are dealing with very dry conditions. Nationally, though, a lot of the southern plains, Midwest seeing improved drought conditions, so that's supporting this idea that we might actually start to grow the herd in 2025. How much is still a question. We'll get a better idea for that later in July when USDA releases the semi-annual cattle inventory report, the first time they'll have put out that report since 2023. But the best news that we have to share with you today, of course, is the summer video sales. You know, we were optimistic for them. We're pretty certain it'd be record high prices again. The general thinking was 10% above last year, but we blew that out of the water. 17 to 22% higher on the calves selling on the video in June and early July. So a lot of optimism there. You know, looking at the results from the Superior and Cattle Country video sale, on Cattle Country video, we saw a lot of those 8-weight yearling steers bringing $3.15 to $3.40, 9 weights $3 up to $3.25. For Superior, most of those light 5-weight steers were north of $4. The heavier 5 weights, a lot of them $3.65, some up to $3.96. In the Northern Livestock video sale, it's a similar story, just stronger prices. Light 5-weight steers average $4.11, the light 6 weights at $3.63. As you look at what those are dollaring up to, it's $330 to $372 per head more than they brought last year. So we're talking a lot of these light steer calves dollaring up $2,100, $2,200 a head, heavier ones $22 or $23. Now, it didn't seem like we were seeing substantially reduced heifer numbers. That discount on the heifer is still $30 to $40 a hundredweight. You can see the upcoming video auctions there and a lot of those consignment deadlines. You know, at this point, seems like a lot of cattle have been pulled forward, where historically they might have sold on a later video sale. Guys chose to consign early, trying to take advantage of the high prices, and it's hard to argue with that line of thinking. Looking at our local auction markets, of course, this is a quieter time of year for many of them, as we just don't see a lot of cattle sell at this time. There were a fair amount of cull cows moving in June, and boy, they met strong prices. Most of them would sell $150 to $170. You know, the cull bulls very strong, $170 up to $210. We've seen some of those great big bulls dollar up to as much as $5,500 a head. You can see the effect that beef cow harvest being down 17% from a year ago is having, as well as the record demand for lean 90s trim. So Americans love burger, and boy, it's helping to support those cow prices. Now, wrapping up looking at the lamb values in the first sales of the summer, prices generally 2 to 10% lower. There at the Newell sheep yards, we saw 70-pound lambs average $234, the 90 to 110 pounders averaging $224, and at Pay's 80-pound lambs from $225 to $243, 90 pounders $216 to $232. Well, we're certainly excited for what we're seeing out of these higher prices. It creates a heck of opportunity for our ranchers to be able to have that profitability again, whether it's bringing the next generation back, paying down debt, investing in the ranch, a lot of opportunity. Of course, challenges exist from drought and these high feed costs, but the future looks pretty bright. You know, given the fact that we just don't have the replacement heifers in the pipeline, it seems like even if we were to start aggressively retaining heifers, we've got at least 12 months of pretty strong prices in front of us. All that if the demand will hold out. Consumer beef demand is going to be critical to maintaining these prices, so we'll be watching it closely and the macroeconomic concerns, but at this point, the outlook is pretty bright for the cattle industry. Thanks so much for joining us for this month's update on our livestock markets. I'm Colter Brown, Northern Ag Network.